Hey everyone, my name is Rahul Kumar from Airwallex. We are on Builders and Backers, and today we have Amish Jani from Firstmark Capital and Samir Shergill from Highbeam.
Hi, I'm Amish Jani. I'm a founder and partner of Firstmark. We are a venture firm based here in New York City.
Hi, I'm Samir. I'm the co-founder and CEO of Highbeam, a cash management platform for consumer brands.
Samir, 5 years from now, what percentage of purchases will be initiated by agents? Break that down for me, consumer, B2B.
So I think that it's an interesting thing about what does it mean to be initiated. I think that
Okay.
there's this concept of how do you help me select what I want to buy, and then how do you execute.
Okay.
I think actually it's different on both of them. So for consumer, I think there'll be agents quite involved in the selection process, like help me curate and decide. And for B2B, it's more like I think they'll be more involved in the execution process. So long-winded way of saying, I think on the consumer side, some touch point to selection, over 75% involved in the creation process. On the B2B side, I think like it's the opposite. I think selection will still be quite manual, but the execution layer will be 75-80% automated.
Okay. Amish, same question over to you and why.
Yeah, so the best analog that I could think of was the transition we went to mobile. And so, having been a part of Shopify's journey and seeing, that rise in mobile traffic, gosh, this must have been 2012, 13 that we crossed over, where they started seeing more traffic from the web, from mobile than with the web. And then, but transactions didn't quite follow that. So I think it was probably another 3 or 4 years before those two things happened, where transactions, mobile transactions crossed web transactions. So if I were to kind of borrow from that very loosely, I just saw some stats that for the first time, I think Cloudflare talked about agentic traffic surpassing human traffic. And so as that goes to the transactional layer, I don't know. I'd probably bet 5 years from now we're probably 50-50.
Okay.
And I do think B2B and the considered purchases are are going to operate a little bit different than the consumer side. I think the consumer side will probably develop that into a habit, and you'll see actually a pretty high transaction rate. And the B2B side, we still wind up doing all these authentication and checkpoints. So there are going to be humans in the loop, and especially the size of those transactions are going to be a lot larger. So, volume versus size becomes a thing. So
Give me a percentage on B2B.
on B2B, I'd say a third.
Okay.
It's also interesting, I think, how you define agentic in this context. Like if you have an AP bill pay system today and you tell it to schedule a payment for you, right? It's not agentic, but you're
Yeah.
telling it, instructing it to do something in the future. And that's all AP systems. So there's kind of this gradient of what does it
So
mean to be automated?
exactly. So I think that full automation loop, I'm sort of thinking about full automation loop. I think that's much harder. I think with the world that you're talking about, you'll be vast majority of transactions will be
Okay.
executed that way.
Who's wrong and why?
I'm not sure on the select. Well, I think that B2B lagging is, I think it's definitional, almost like what you define as agentic. I think on the B2B side, once you've decided that I have a recurring relationship with a supplier or a counterparty, most of your money flows through kind of known commodities. I have payroll, I have this, I have this. The actual movement of the money, I think, will become automated fairly quickly. But is that truly agentic, or is that just the execution layer? I think there's a definitional question on that. So
But I do agree with you that a lot of businesses are driven by repetitive transactions, and if those transactions fall within certain governance bounds,
right.
they probably will get automated. And I probably would say he's closer to the pin in that definition.
And I think on the consumer side, what's interesting is I was thinking about this in the context of the proxy is if I had all the money in the world, would I hire a person to go do this, and how would they do it? And I think the selection problem for a certain set of commoditized things is actually easier, but there's not that many in consumer that like simple thing like buy me lunch, right? Like that's actually a really hard problem. And even if I had a personal assistant that every day I told that to, I'd be like, oh, I felt like this or that or the other. I think it's going to be still a lot of, as things disaggregate, it'll be interesting to see which pieces are won by whom. And I think that that stuff is still all out there to figure out.
Fair enough. Okay. Well, if there's going to be any material amount of these purchases that are made by agents, let's separate reality from hype. Mish, over to you first. What are people overestimating versus underestimating when it comes to payments made by agents?
I think trust is the biggest thing on both sides of the ledger, right? I mean, how quickly do we think people will turn over trust to an automated infrastructure, and that really comes back to people's taste, individuality. It can go either way. We might wind up in a world where people are actually far more predictable than you'd expect,
Okay.
or you can wind up in a world where I think people want to express their individuality and their taste a lot more and are not willing to necessarily surrender that into an agent that's been broadly trained across a wide set of things. So I think it sort of depends on one's take around that, but yeah, I think that's probably the best answer I got.
Samir, agree or disagree?
I agree. I think that, and I'll extend it a bit. I think that the notion of trust and a standard that the agents will use to interface on, someone owning a new standard for money to flow on quickly and getting it out there such that it's trusted by everyone to operate on, that's like the holy grail. Everyone, of course, you want it, right? And if you're a Visa or Stripe or whoever, you want to go, hey, we've got this new standard. I think the reality is there is already a standard for how transactions occur.
Yes.
There's, the majority of transactions will continue to flow through those. I don't think there's some big bang new standard that agents will magically go and tip over into in the short run. And so I think that that part, and the trust in that is still far away. And I think the other part that I think is hyped right now is, I think there's this idea in AI right now of this kind of one-shot magic, which is true in coding. And as someone who's felt it personally, it's magic,
Yep.
right? But this one-shot analogy of like, I'll just have an agent do it, and I'll just tell it to do it, and it's going to happen. I don't think that's true. I think it's more going to happen that the
Do you think it's
existing.
not true? Or do you think it's not true for now?
I think it's not true for a long time.
Okay.
Think about most of the dialogues are that you have with people, they tend to go back and forth, right?
Yeah.
There's a, hey, go figure out what are the options. Then I got to think about it a little bit.
Yeah.
Then think about what are the right price bands. And once I know the price bands, I'm going to trade off on certain things, right? There's a lot of loops that you wind up going through. And I think that's the hardest thing. And that's why I go back to this taste function is like today I can have one-click checkout on a lot of different platforms.
Yep.
So the transactional part of this isn't the part that anyone's questioning. I think it's really the question of when do I get to a point where I think an agent will have considered everything that I would have considered, iterated it through it, gotten to a level of trust where I don't even need it to be explained to me to validate it and execute. And I think that's where I see this, probably taking a little bit
And it's
longer.
kind of that collective problem solving to work with you, and that every time you use it, it gets better and better and better and gets what you need out of your head. And I think the interesting thing is that going to be multiple agents for different facets of your life, or is that one agent that does everything? And I think that's all up for grabs right now.
But Amish, what do you think is infrastructure-wise is curtailing that experience coming to fruition? If I tell the agent to do one thing and it just goes ahead and does it?
What do I think are the impediments to that?
Yeah.
So I think it's really personalization.
Okay.
At the end of the day, you really have to be able to express who you are, instantiate it in your version of that agent, and get to a level of trust that that they're going to do that. And then there's a matter of stakes, right? There's low stakes things, things that are very replaceable. There are higher stakes things, family vacation. And so I think
The
each of
highest
those
stake thing is family vacation.
that is the absolute highest
Which you
stake
need
thing.
to apparently pen in a little bit more of.
I will not admit that publicly, but true or
So
not.
I think it really flexes on those two dimensions, and the more personalized you can get, and I think the training will start at kind of much to the early days of commerce where it was commoditized things, and then people didn't think people would buy sneakers on the internet, and eventually people got used to that behavior. So we'll go up a curve. I mean, even today you wouldn't believe it, but what is it? 15-20% of commerce is e-commerce, right? You'd
Yep.
think
Yep.
that number. It feels like in our worlds that's a much higher number.
Yep.
These things just take a while.
It's interesting. You mentioned, Mish, that early on people believed that we were not going to buy sneakers on the internet. They're clearly buying them now. Goat, one of our customers, shout out. When it
Cars
comes
on
to
the internet,
yeah,
that's
as
another
well.
one. Speaking of our backdrop.
Even though I think we're enjoying doing this one in person today, Mish is probably going to walk away with one of these a little bit later on. But
Airwallex giveaway.
I think there's yeah, fair enough. One for me as well. I think it'd be really interesting to hear from you, Amish, given your experience with Shopify. So prior to investing in Shopify, what do you think is the biggest thing that investors actually missed at that point in time? And then when we talk about agentic payments today, what do you think investors are missing about agentic payments?
Yeah. Well, Shopify, I think uh, at that time, we were in a world where most of e-commerce had not yet shifted, or the degree of this shift in e-commerce had not yet happened. So the interesting, innovative companies were actually just beginning to sell things online. So you had the rise of the Zapposes of the world and
Yep.
things like that. And there were lots of questions on whether furniture and cars and all of this stuff would move online. I think the mental model that we sort of had coming into that opportunity was what you had seen happening across content and blogging, and this kind of democratization of publishing. And sort of, we felt like as we looked at these interesting brands, we followed this little green bag up the supply chain up to Ottawa, and you see this company that was providing software for entrepreneurs to democratize commerce. And I think that's the thing that we believed in and was the opportunity. Whereas most of the world was very much fixated about on big retailers, big brands. Most of the platforms at the time, think Demandware, ATG, these were all servicing the biggest of the big. And in fact, for many years, I think the question for Shopify was always, is the TAM big enough? Is the TAM big enough? Is the TAM big enough? We went public, and for 3 years after being public, I think the company beat and raised for 12 quarters in a row. And it was, just kind of sitting out there for everyone to experience. But it was only when they kept beating and raising and beating and raising that people started taking notice, realizing, oh, maybe this is a mega trend that's actually happening. And that's when you saw, the valuation of the company really begin to take off as people understood that this was a massive, massive tailwind. So the whole TAM of that opportunity, I think, was misunderstood across the journey, even into the public markets and as far late into the public markets as that is. Um, so I think that's one of the big pieces. And I think when you talk about agentic payments, you could probably abstract that into a bigger comment around how AI is transforming the world. But if you think about
We'll get to that.
the amount of money that is moving on these rails, I mean, it's, I don't know, something like global commerce is something like $30 trillion. So it's oftentimes the TAM of these things that people vastly underestimate. And so I think that's going to be the same thing here, is that there's huge, huge opportunities. It's why you're seeing the success that you're seeing as at Airwallex, and how that space is transforming so quickly. I think the people probably misunderstand how big this can be.
Okay. From an operator perspective, Samir, what do you think operators are missing? What's the equivalent of that blind spot in the operating side?
You mean operators in our customers, brand
Yeah,
operators,
brand
or
owners.
for that specifically?
Yeah, what do you think? So from you have Tam as a blind spot,
Oh, I see.
kind of like when he's thinking about this from an investing framework, from a operating framework, when you think about brand operators, what do you think that blind spot is there?
I'm not sure if it's as much as a blind spot, but I think it's really hard for them to optimize their they live and die, a lot of these brands, by working capital and cash management. And I think for a while that was masked by cheap capital, and there was this narrative that you can kind of grow the business and access this capital. And if you get to a certain size, there's an outcome.
Okay.
Someone will buy you, you don't care about everything else as long as you can get to this magic threshold, 50 million, 75 million, whatever it is. So people optimize for their sales. And I think what people are realizing is that, especially in this business, the real longevity comes from controlling your destiny. And that comes to, are you profitable? Can you manage your cash really aggressively, which is not the same thing? And can you do that in a way that you're committed to? And it's hard because people don't start businesses because of the finances. They start because they love their product, they love their marketing. And I think their blind spot is kind of, whatever it is, eat your vegetables or whatever it is. And you got to like ensure that you understand what drives your finances and optimize it. And as boring as that sounds, sometimes these brand founders, the ones that do it really well are successful, and the ones that don't are not. And I think that that's the part where people are having the realization that I've got to do it. I just can't avoid that anymore. And maybe it's not as sexy as, optimizing my advertising or my product, but I really need to focus on it. I think that's probably what I'd say.
I mean, for brand owners especially, though, what about underlying when it comes to inventory,
Mm,
labeling, attributes? Because when we think about, especially from the brand side, for discovery, you're sitting inside ChatGPT today, and it's like, hey, I want
yeah,
a floral
yeah.
sundress. What does that actually mean? Are brand owners actually prepared for that?
It's a good question. And I think that Shopify probably has a lot to say about how they'll continue to do that as the kind of source of truth for a lot of things. But I think most brand operators are in a kind of wait and see mode. They're also very much consumed with the day to day of like, how do I just get my business and people to buy more? I do think that there's been this equilibrium where most brand owners are very reliant on a few marketing platforms like Facebook, and they're very reliant on a few channels like, their website or maybe Amazon. And now they're saying like, wait, there's this opportunity and threat where there might be multiple things moving, and how do I get ready for that? And I think the biggest thing they can do is experiment and see, but also be conscious of the fact that a new channel is an opportunity and a threat because you get disintermediated from the customer experience. What Shopify did was it allowed these brands to control the customer experience, right? And so I think they're nervous about understanding what does marketing mean in that world, what is the equivalent of SEO and all that stuff. But I think a lot of the smarter ones are starting to test, because the ones that move first, there'll be a period of time where there'll be this unsustainable advantage for the first few brands that figure out how to get better. When ChatGPT asked me what's the best, connector for my USB-C,
Yep.
the person there is going to win.
AEO,
Yeah.
GEO stuff.
And I think that that's going to matter for a certain duration before it evens out. So I think the brands that see that opportunity will do well.
Okay. If that blind spot is, let's say it's real in this case, then it also raises kind of the big money question, which is who actually captures value when the buying surface actually changes? So if agentic commerce actually ends up becoming real, who do you think is capturing the most amount of value? Is it the merchant, the platform, payment rails, infra? Who is it?
I would say, I mean, platforms have historically always captured value. I think when you have a lot of fragmentation on one side and you have a platform that's able to offer uh, elite capabilities at scale, that is just a gathering point for economic leverage. And that doesn't mean that all of the individuals aren't accomplishing a lot more than they could individually. They are also getting superpowers, but platforms tend to aggregate a lot of power in that equation.
Okay.
And so that's where I would say is where a lot of the value
Between
occurs.
the two of you, who do you think loses the most in this case?
It's not a zero-sum game, but if you say like the pie is the pie and it's been divvied up in this current system amongst, we all know who the players are who have the biggest piece of the pie, I think that they are the biggest risk of losing. And so it's existing platforms. And if there's a trend really to move to new platforms, if like Google does not control search, like they lose out. If Facebook is not the dominant platform for discovery for customers to go buy things, they lose out. Now, I'm not saying they don't have a good chance not to, but they're probably the most at risk. I don't know if you agree with that or not.
Well, I mean, I think there are a lot of folks that would love for the stranglehold of that duopoly to get broken apart, and I think that's where sort of this creator economy and influencer economy is starting to change where customers make decisions and how they make decisions. So, to the extent that that can proliferate, but I think it's really hard to aggregate billions of people into a place, and so that's going to be really hard to disrupt. I think the question is, can you find new and other interesting venues? Can Snap or a Pinterest or some of these other platforms also grow and scale? And can you have many more of those so that merchants are not constrained by just two folks, and you can expand that CAC opportunity across a wider
I think that's
range?
right. I think that Misha's point on, in the long run, the merchant's always going to be the small one in the equation, right? So you're the smallest participant. What do you want? You don't want to be beholden to only one or two or three platforms that control your destiny, because
Yep.
over the long term, they'll leach out all the economics from the business.
Correct.
So the more that there's a chance to have more of that, the best possible chance there's for the merchant to
Okay.
keep a bigger piece of the pie. It's probably the way it goes.
So Samir kind of mentioned this the talk of AI going on in Shopify world. So let's kind of get to that point. And Shopify is actually probably one of the best examples to pressure test this through. One from an infra perspective, one of the largest winners when it came to actually supporting a majority of these brands. Amish, what's Shopify's role in commerce in the next decade?
I mean, look, I think it will remain the same as I've historically seen it to be, which is the easiest platform to build a business, to become an entrepreneur, to sell.
Yep.
And I think the platform has already shown its ability to morph itself to support that. I think Shopify has never thought of themselves as just purely the website and the infrastructure. It's the infrastructure that supports a website. They've gone headless. They've decoupled these things. They support all of your different channels. They've integrated with wholesale. So really, the idea is wherever you need to be a point of distribution for your product, Shopify wants to be there to support that. and then to also give you the superpowers of scale that a platform like that does. And so, wrapping AI natively into the feel of that product and making that life easier and easier. So I think if anything, this new world provides an even stronger opportunity for that business. And I'm pretty bullish on where they're headed.
Yeah, how do you think about this from the lens of a lot of brand builders complaining that either there are limitations to Shopify or it's expensive, or I pay a bunch for a bunch of different plugins, and now you have the advent of brand owners, I wouldn't say vibe coding their own websites, but they're like, hey, we can go build a lot of this on our own right now. What do you say in response to that?
Look, I think people can if they have that interest. I think most merchants don't get into the business to build a technology platform and to support a bunch of software that whether they build or someone on their team build that then leaves and then that knowledge goes. Like I do believe that there is tremendous value in the wisdom of the crowds as you have a platform that is pressure tested by thousands of customers, supports a wide range of requirements and needs, has been hardened, has been security tested. I mean, one of the biggest things that people one of the biggest opportunities that Shopify supports are these like incredible singular moments where all of a sudden you're on the Today Show, or Taylor Swift wears your T-shirt, or Rihanna holds a flash sale, and demand spikes through the roof. You cannot vibe code that. You need that in a platform. So I think the idea that an operator is just going to vibe code, this platform is kind of ludicrous to me. Um, Now, might I want to customize my front end, make it look a little prettier, do other things? Like Shopify supports that mode. So uh, I'm a big believer that software will evolve, but will continue, and that it does not make sense if you're spending hundreds or thousands of dollars to think about using a full-time person, which costs orders of magnitude of that, taking meaningful fractions of their time to dedicate that to a product that's going to be, a local Maxima product.
Okay, Samir, you were nodding. You clearly agree
I
with the
just
majority of
I agree with
this.
everything Amish says. That's like
Everything.
part of his investment was like is like I have to
Well,
go.
I
No, I'm
mean,
joking.
we had to have a meeting of minds to
Otherwise, the
to
thesis. No,
Well, so
yeah,
so
yeah.
you agree with in terms of what ends up staying on Shopify. Do you think anything leaves from Shopify, if at all? And if the answer is no, it's no.
I think that I agree on the infrastructure to power um, the merchant is a core mission critical piece of software that no one's going to vibe code as a
Okay.
hobbyist anytime soon. I think that the hobbyist argument of like, hey, I'm going to take OpenClaw and build my own little thing to go run my business is A, super hard to do, and B, all you're doing is that then, because that's a business of itself. So I think that on the second point on which parts leave, I think it's a question on if the primary customer experience is no longer the website, which is a core part of the value proposition, what else does it evolve into? So I think it's more of an evolution than what leaves. I think it's also how does Shopify support the macro trends that continue to occur. But I like the seat they have, obviously, which is like, it is also interesting to think about like, my proxy is usually like, who are the most important relationships for the merchant? Like, who do they really care to run their business? And forget the technology for a second. Like, they really care about what Shopify does for their business. They really care what their supplier does for their business. They really care for about a few other, and they're one of those people.
Yep.
So I'm more, I think if you're running an app on Shopify, I think you should think about what that's going to look like. But if you're Shopify, you're going to be fine, is my guess.
Okay. In terms of who ends up owning the customer experience going forward, so if Shopify stays the majority of this stay on, are we in agreement that Shopify ends up owning the customer experience of the brand in this case that is building on Shopify?
And when you say owning the customer experience, like I think the it's never been a better time to be a merchant, being able to express whatever version of your personality there is, and therefore as a user, I don't necessarily have to know anything is going on with Shopify. So I think the brand's ability to control their experience is at an all-time high. Um, but I think on the back end, obviously, Shopify is going to be involved with transacting that experience and managing that experience. So um, I think the ability for a brand to express itself and support a customer on the journey that they want to create, I mean, this is a wonderful time to be building.
So Amish, who ends up owning the customer experience going forward? Let's say there is even mild unbundling of Shopify, or the experience ends up surfacing in a chat GPT as well. Who actually owns the customer experience?
Yeah, I mean, look, I think it's never been a better time for a merchant to design the experience that they want. The tools are getting easier, the front ends are getting decoupled. So, in that sense, I think it's never been a better time for the merchant to control and manage that customer journey. Of course, Shopify is going to be doing all the hard work and all the lifting behind the scenes. But I think from a merchant standpoint, they're going to own that brand experience and really control that.
Do you agree?
I think so, with the caveat that I think the lines will get blurred between you have Google search, let's just say now, and you click and you have like a brand driven experience, and the brand controls the experience in that world. I think it'll be interesting to see, does the brand create its own agents that are then talking to the customer's agents on the creation process? And then how does that work in terms of your personal shopper that understands your taste talking to the brand's catalog agent to say, like, well, this size and surface things? And in that world, how does the brand and Shopify help control the experience for your personal shopper? Because in that world, you can make the argument that whoever builds the personal shopper versus just like Google has a lot of value because of their search results, but maybe the personal shopper has even more value. So
That's true.
I think there's an interesting thing on how that plays out and how the agents talk to each other. And, you know, Shopify definitely has prime position for powering the merchant's agent, but who's going to power the consumer's agent? Unclear.
That's true. I mean, maybe an analogy would be if someone's hiring their stylist, their
Yeah,
agent stylist,
yeah,
right? That person is obviously thinking about the experience, the products, how they come together, and
right.
so
It's like the example, and
that might change the consumer front end.
I try to think of this analogy of like, what would a person do? So we went through a renovation in our apartment and we got an interior designer. And the difference between me going to the furniture stores and the interior designer going, like, I have to trust the interior designer, and that's a big deal. And but once she's there, she's going to show me products and she has a relationship and she's going to make a certain cut that I understand is transparent. But at that point, the merchant is very much, the customer becomes the interior designer, not me. So if the customer becomes the agent, not the person, what does that mean for what you're building? And what does the agent care about? And already we're seeing this where, like, we're doing our own case studies or whatever we might do. We're told, like, well, the AI is like lots of graphs and data, so make that a big deal. So just like, are you going to build for the agents or you build for, and there'll be an interesting kind of mix of brands that emerge from that, I think.
Okay. Well, whether Shopify ends up getting unbundled, rebundled, redefined, or remixed in some type of way, something still has to sit underneath to support as an infra layer. So let's start chatting about that. Amish, OpenAI, Anthropic, Google Meta may end up becoming the obvious AI behemoths, but from the perspective of where VC dollars are going, in terms of what layer of the agentic stack or the agentic commerce stack specifically ends up becoming mandatory infra rather than a feature.
So, if I were to think about where we see the biggest transitions, um, I think one of the worlds that we see changing fundamental infrastructure is blockchain infrastructure and stablecoins. Um, I think that in that new paradigm, there are a lot of things that begin to fall away that exist in traditional rails. And so that's certainly an area that we've been spending time in and investing in. And associated with that is thinking about things like privacy and security, right? I mean, in many ways, we call it crypto, but actually all of these transactions are out in the open. So I think how you think about privacy in that context of your purchasing layer and your wallets. So there's a lot of things that get kind of built up on top of that. So I think that's where we see at fundamentally the infrastructure layer, like what are the things that have to begin to what are beginning to pivot in this globally connected environment, and that's certainly one of them.
Okay. Samir, from what brands actually need, is that where the value ends up getting created from what Amish just mentioned? Or is Amish describing a category investors love but operators don't actually urgently need? Like, are you hearing clamoring about like stablecoin support for majority of your brands right now?
We're not yet. I'm
Okay.
not saying that we wouldn't in the future, but what they do care about is when I pay my supplier in Turkey or China, how do I know that they got paid on time and I don't pay so much money? Now, if that's a solution for that, great. But I think they don't care so much about the solution as the problem, which is like, I got to plan how much I can afford to buy and I got to pay my supplier on time. And if you can do it cheaper, better for me, great. Use what you want. Use crypto, use passenger pigeon, use
Yeah.
whatever. But I think that it'll be interesting to see what infrastructure really becomes key to the movement of money for these merchants in and out. Because at the end of the day, it's like who's moving the money in and who's moving the money out is where it comes down to, and who makes the decision on what infrastructure to use. So I think that part will be really interesting to see, like, who does the merchant trust to say, this is the provider that's going to be responsible for doing X, Y, Z, and then that person has a lot of power to be either the infrastructure player themselves or to pick what infrastructure they use. I think it's still early days, honestly. I think that most brand founders are consumed with the stuff of running their business. They don't think about this that often. They actually think about their product and marketing. That's what's
But
on mind.
I think that's all of the examples, or everything that is consistently true about the merchant, and it goes back to the vibe coding question, is about how do I execute my business better, and it is not about understanding the details of how these things happen. So,
Yeah.
I would argue that um, what we are looking for as investors are change states, and those change states don't necessarily have to be merchant visible.
Yeah.
And so whether it's the case of moving on to the blockchain, or even think about a lot of the agentic infrastructure where you've got to do tons of data cleansing, where you've got to make sure that the models don't hallucinate, you've got all this infrastructure that you've got to build. The merchants don't care about any of that.
Yep.
They just want to know it works. They don't need to understand all of the architectural decisions that you've made, but they do want to make sure it is 100% reliable, and there is a high degree of trust in that, because they're going to make fundamental decisions about their business based on it. So I think the merchants have never cared about the technology, but they just want to make sure they can trust it.
I think what you mentioned there on the applied, I'll call it the applied AI layer, which is there's the foundational model, but I think increasingly we're finding that the models continue to evolve, but they're already good enough to do a lot of things, but it's really hard to get them to do it. And the reason is you have to harness the right context and memory, and are you picking the right model at the right time, and the cost and all that layer. And I think who wins the applied AI layer and provides the solution for the merchant or the customer is still going to be really interesting. Now, I don't know if it's one company or not. I don't know which, there's pieces of that, like, whether it be Open Router or Langfuse or like infrastructure players that own that. But I think that's a really interesting space, because the applied AI layer is really where the potential gets translated into the actual value the merchant is seeing, right? And is it going to be one infrastructure player? Is it like just multiple winners providing specific applied AI layers? Like, I don't know. I think that's where.
But can you imagine a world where a merchant who's now vibe coded their their platform, and now all of a sudden is embedding Open Router, and now is having to understand how
Yeah, that's
models
why.
making token decisions? Like, we're starting to go down a rabbit hole here that
No.
no merchant would want to go
So
down.
we've had stories where, like, we talk to brand founders and they'll, a certain very vocal minority on LinkedIn will say, like, I've used Claude to transform my business.
Okay.
And then you like to kind of get under the hood and say, well, what are you doing? And they're like, well, I asked for something, like, let's say something hard. I want my contribution margin by SKU, and tell me 5 things I should do. And the thing with the LM is it's never going to say no. So it gives you this information that you think is magic, and you're like, oh my God. And you look at it, oh, it's not quite right. Oh, well, this is wrong. And I run it again, and it's kind of off again, and it doesn't quite work. And this promise kind of starts falling off a cliff, and then you got to maintain it. And then now you talk to them 3 months later, and you're like, well, do you use it then? Like, kind of. And they'll claim we do this thing on the side or not, but like core infrastructure to run your business that you can rely on, it's not going to be vibe coded by a hobbyist anytime soon. And I think that arc on who wins that and is the one responsible for providing that value to the customer by problem space, like, I think is super interesting. And I think we're early stages there because it's changed so fast. If we look at even internally ourselves, we've had to rebuild the infrastructure 3 times the last 3 months just to be able to keep track of, like, which model to use and how. And I think that's still very, very early days.
Okay. So we talked about platform shifts, where value accrues. Now let's bring it back to what actually brands should be doing today. Given the data that Highbeam sees and the litany of brands that you actually support on the platform today, what is one thing that every brand should definitely be doing more of right now,
Other than using high beam, you mean? No,
other
joking.
than using Highbeam? Yeah.
No, I, I think that I alluded a bit earlier. I think 2 things. One is I'm not a brand operator, but I talk to a ton of them, and the smartest ones. It takes 3 things in my mind to really build a successful brand. Like, you got to have a great product, and you can't fake that, and you got to go want to do that. Then you got to have great distribution, and that's marketing, it's websites, everything. And you got to have great financial management. And I think a lot of brand founders, the best ones, know all 3, And it's surprising how many great brand founders come from a great financial management background because the business is so hard if you don't do it. It's working capital intensive, it's low margin. So I think that continuing to focus equal effort on all three of those, I think is something that brand founders have to continue to do. And if they do that, they'll be much more successful than not. And I think that the safety net, as I talked about earlier, is kind of eroded, where if you don't do it and can take control of your destiny, it's very hard. Private equity is not coming around anymore and paying multiples to do a roll up to get kind of like some exit here. Like what I find really interesting is we'll see a lot of brands that on the surface look the same. Like let's just say 20 million of sales. And you wouldn't know publicly, they all have 6 stores, 7 stores. And you say it's the same business, equally look great on Twitter. Underneath the surface, there's one business clipping 2 million in free cash flow, supporting the founder, and the other one is literally paying all their money to interest in that. And the founder's like stressed all the time. And I think being in camp B and setting it up to do that versus A, just from a ability to support and grow your business and put your energy into that, is the most important thing that they could do. And it's hard. It's just hard.
On those three pillars that you mentioned, which included distribution and financial management as well, which one do you usually see the brands either lacking on or not paying the most amount of attention to?
It's always, but financial management.
Okay.
And part of the reason is like it's comes last. Like if you don't have a product and distribution, there's no problem with financial management.
No.
Like you have, necessary but not sufficient. It's also like most brand founders do not get in the business to do that. They actually love their product. They love their marketing. They love their website. They like want to kind of back away from the financial management piece. And so that's probably what I've.
Well, I mean, that's one of the things that led us to make the investment in Highbeam is seeing that fundamental challenge of just the information asymmetry and how well the operators could understand their businesses and how long it took for them to get a perspective from, trusted advisors and financial advisors and things like that. Like that information lag was months sometimes. And so, moving that to something that's much more real time, where we've seen, and I've been involved with D2C brands that have made very consequential inventory decisions, but inventory is pricing, is SKUs,
Yep.
is, a lot of other things. And so, being able to get a real time view, and that is like the lifeblood of your business, and understanding that and having a partner that can do that in real time. Everything else kind of operate. You know how much you've trafficked at Facebook and what the cost was. Like all of the other parts of that equation is fairly real time. This is the one that needs to be brought into the equation.
Well, we do love High Beam, but on those 3 points that Samir had mentioned, Amish, when you hear those 3 points between like distribution, including financial management and whatnot, where do you kind of discern between what is an actual software opportunity versus just poor operating discipline?
Um, Usually based on whether you can find whether the data exists and whether there's automation opportunities. If the data exists and there are automation opportunities, there's a software opportunity. That defines a software opportunity. I think, for example, on the product side of that, of those things, that is about taste. It's about aesthetics. It's about knowing your audience. It's about inferring where the world is going. It's a very forward-looking things, and you're trying to divine what your customers want, but sometimes you're even creating the demand for what the customers want. That's a lot harder to do. But I think whenever you see the intersection of data and automation opportunity, that's a perfect software opportunity.
Okay. So flip side of in terms of what brands should be doing more of is what they're actually doing day to day today that may eventually end up breaking. Samir, let's talk about the ticking time bomb in D2C. What is the biggest actual ticking time bomb in D2C right now?
The one that's already gone off is the one we mentioned on cheap capital. I think that gravy train ended with good reason. I think it built up a couple of bad habits. But I think the interesting one is over reliance on a couple of distribution platforms. And I think that I don't know if that's a ticking time bomb more so than in the long run, it's very hard to scale a really sustainable business where you don't control the end customer outcome. So I'll give you an example. You might scale really quickly on Amazon, and it might be like the classic example used to be like, oh, you've put your product in Costco or Walmart, and your product's dead a year later because you got great sales, but they squeezed you on margin, and you now can't afford to service anyone else. So it's kind of that trap of feeling like there's this shiny object here, but 90% of my business goes on this one platform where I don't quite control things, but it seems to be working, so I'm going to double down there. And sometimes there's no choice. I think that's tricky, but there's no easy solution. I actually find it's interesting. A lot of the really good brands came back from D2C to opening their own retail presences because they view it as one, I control my destiny. Two, from a branding experience, I actually can get them to work together. And it's this mixed thing. I've got the stores, I've got the D2C kind of website, I've got other things. And it's like this, having a healthy mix of things that you're driving and considering is much better in my mind than, this one thing that I'm just going to scale on and become a TikTok brand. And that's just, to me, is risky.
Has there been any interesting distribution nodes that you've seen that brands should be doing more of? So if you don't want to be locked into one or two, retail is one of them you mentioned. You can open up your own shop. Any creative stuff that you see from some of your customers that other brands should be doing a little bit more of when it comes to distribution
I think
hacks?
a lot of it comes down to the consistency of your company and product. Like, not everyone should be on TikTok as a TikTok, or maybe everyone should be on TikTok. I don't know, but like it's unclear to me if that's the right thing for everyone. But I do think there's people seeing success on live shopping. Like, there's a lot of platforms there that have emerged, and like, there's people seeing success on TikTok. I think it's more a question of
Meat is being sold on live shopping now, apparently.
I'm
It's
not
doing very
surprised.
well.
I'm not surprised. And these models continue to come up, and I think that the people that are experimenting and constantly trying, and then yet still true to the identity of the brand. The classic canonical case study examples of marketing are like, I can't remember what luxury brand it was, but they started selling keychains, right? And you erode things over time and it's not consistent, because why I'm going to Walmart and seeing this luxury brand's keychain there. So I think that the notion of constantly be experimenting, find those niches that you want to go try for, and then what those are. Yeah, I think live shopping is really interesting. I think that TikTok and others are. I think that what the experience becomes of selling on Meta is going to change over time as they kind of think about AI on their side. And the last thing I'll mention, I think that this notion of brand agents is really interesting. What is it that you want? Like, a catalog on a website is actually a pretty terrible shopping experience, and like most people are pretty frustrated. People got used to it. But what is the evolution of that in terms of you have someone's attention? Now, what do you do if they walked into a store, you'd want someone to greet them, learn about them, give them something. Like, what is the equivalent of that online? And I think that's like
Context gathering.
context gathering, but it's also like, it's hard. It's really hard to gather the context from someone and then be able to serve them back something they really want. So I think there's also this, sorry, it's a little bit related. I'm really interested to think about what becomes the equivalent of the department store online. Like, the department store has had a bit of a resurgence, but like this curated multiple brand experience on a personalized shopper with an agent that has enough from different pieces. I think something really interesting business there, and brands collaborating with those, not the Amazons but with those kind of aggregators that are also small businesses themselves. I think that's super interesting.
Samir, you spoke about the three pillars before. Let's chat about the last one on financial management. You recently introduced Luma as an AI finance team for brands. Most finance tools still feel like task automation. What is Luma trying to replace? Finance tasks, finance roles, or the way that brands make financial decisions entirely?
I think it's the latter, which is, how do you help brands fundamentally make better financial decisions? And I think we talked about it earlier. It's a tough problem because you have a ton of business data that's pretty high quality data that's available for decision making, but it's hard to make sense of. You have Shopify data, you have Facebook data, you have your bank data, you have ledger data. And so the real hope behind Luma is a partner to parse through all that information, surface what's really important so you can do your job better. And part of that is accessing the financial information and financial statements and what you would think about as a typical finance function. But I think part of that is elevating that, hopefully, to where the role of finance isn't relegated to sometimes it's kind of a backward record keeping. But can it actually be a partner to help you make decisions in the day to day on, can I afford to open a store, or should I go buy more inventory or less, or all these kind of decisions, understanding what it takes to do that and help you do that. So that's the goal. Now, how that manifests itself in the organization depends on the size of the org. Sometimes if you have a single person finance team, it's hopefully helping supercharge that person. If you have a much larger finance team, it might be for a specific person, but that's broadly how I think about it.
If someone asks Luma today if they should open up a store, will Luma actually tell you?
Yeah, it's a scenario. So here's where the context matters, where if you plug in the right data and you give it the right context, it can set up a recommendation on, here's how I'll think about it. And actually will create a scenario plan for you we have a skill around opening a store. And so it'll create that, and then you can go and say, oh, here's my parameters, where are you opening it? It'll ask you a few questions, and it'll give you an answer. Now you got to probably go and get some more context with it, but it'll give it a good shot.
Amazing. And if Luma works the way that you imagine, what does a finance team actually look like in 3 years?
It's a good question. I think that, again, it depends on the role the finance team is performing. I think that
Like, do you think this is a headcount reduction play in general? Do you think in terms of, do you just need less people to do finance? Or is it, do you have the ability to look at metrics that you were not looking at before? Like, what's actually changing?
I think it is probably in the long run work being done by AI that would have been done by people, which eventually manifests itself in a reduction in headcount. But if you take the analogy with Shopify, maybe like people had their own web developers, and then Shopify obviated the need for a large amount of that. But I think with finance, what's going to happen is you're going to have a one-person finance team or two-person finance team, and that person can do just a lot more, and that they're focused on the task, not the kind of move the money in and out task, but they actually have infrastructure to help them make the business make better decisions. Um, which is why in some ways we're focused on the segment that can make that transformation the easiest. It's easier to do that at a customer that has a 3-person finance team than a customer that has a 50-person finance team. Because if you have a 50-person finance team, you got to pitch an AI solution for each part of the org.
Yep.
You got to pitch an AP solution, an AR solution, and blah, 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 blah. Whereas we can say this is a platform that's going to change how you operate the business. And once you put it in place, how you hire headcount might be different because it's performing a different role. You might have like your demand planner now be a core person that helps you do better inventory planning, versus now that's just like a part-time role, one-off, because you don't have the capability to have that. So I think the roles will evolve as we learn. But my guess is, as you think of traditional finance, like a 1 or 2-person finance team.
I generally agree from a role shifting perspective, and Amish over at First Mark held their Guild Summit yesterday. So CFO of Legora had actually mentioned, which is the role of the CFO itself is completely shifting away from FP&A to actually figuring out top line growth. So I suspect something will end up happening in this case, but I think the advantage, especially for smaller brands with Highbeam, is that there was never headcount in the first place to think
That's
about
right.
that. Yeah.
That's right. Like it's, the people, it's this irony obviously of like the people that need the best financial management can least afford it.
Yeah.
Because you're running a working capital intensive, low margin business. I joke that like a 10 million consumer brand, the finances are much more complex than a $1 billion SaaS company. You have SKU level, contribution margin, low margins, working capital, and yet you have all you can afford is a part-time CFO to kind of help you navigate, which is why brand founders are constantly stressed about their finances. So I think the opportunity really for now is to supercharge that person and team to get better capabilities. And if you can do that, I think then you'll learn on what else they can kind of go do with that technology.
Okay. And Amish, when you hear Samir describe Luma, what separates a real platform company in AI finance from a workflow feature that just ends up getting copied, bundled, or automated away?
Well, I go back to those two things around data. Starts with the data, and I think there's a lot of things that the team has worked on and built to clean up the data. Sometimes people think, oh, well, you can just plug into a bunch of APIs and it just you have your data. It's like, I know from asking that
At
question
Highbeam it
myself
does,
to the
right?
team,
Yeah.
and they rolled their eyes and then rolled out the long scroll-like list of things that they have to actually clean up and work through, validate, normalize, synthesize, create a single version of truth, and then be able to make sure that the model is looking at that the right way. So it's not as easy as it sounds. So I think the data piece of it is the first part of the equation. And then the second piece of it is, of course, like the jobs that can be done, but how do those jobs act as a collaboration hub for the rest of the organization? So the more a piece of software can bring in multiple parties, because this same data might be used by product to decide what are we going to build next. This might be used by merchandising for thinking what color SKUs are moving. It might be used by finance to decide, am I going to use credit or am I going to use balance sheet. It might be used by the CEO to decide how they're thinking about building out their teams. I think the more people you then wind up orchestrating into the platform, the more sticky and powerful it becomes. And the combination of that is really what defines something that's a sticky, investable opportunity, and one that you would not want to waste the time having people trying to vibe code
Yep.
and build.
So this also raises the question of what a banking platform actually should be. So let's chat Highbeam specifically. Amish, banking is hard. Fintechs eventually end up becoming banks, so they despise banks in the beginning. It's why they start the business, and then they realize the most lucrative thing to do is actually probably become a bank. But what makes Highbeam more than just another vertical banking product?
Well, I think this goes to the conversation around markets and how markets are growing. And each one of these markets are becoming more substantial in size and scale. And so being horizontal across everyone no longer allows you to differentiate. And so for us, we think this is true in a lot of areas. You're going to find software that becomes very opinionated about a very specific vertical that it touches because the data, the context, all of the decisioning that you need to make is not related to a generic set of folks. It's very specific to where you operate. So what is a feature to us, what makes this very exciting, is that Highbeam is opinionated, does have context around businesses with inventory, with complex planning needs, very different than a software company and trying to provide banking to startups there. So I think for us, the vertical is the opportunity, and it's the size of that opportunity that probably most people underestimate. As we talked about, there's trillions and trillions of dollars that are spent in this area. And so if you had a financial partner that spoke to you, that not only was your bank, but was your finance organization and supported your finance organization, that becomes really compelling. So I think this idea of having opinions, of knowing how this market operates is a real big opportunity. And it's the verticality that drives that.
Okay. That being said, distribution is hard. Compliance is hard as well. Margins can be thin at times for you. I hope that they're not. Banks exist. So why does Highbeam actually win at the end of the day?
Well,
If you were to
so
put in one sentence, why does Highbeam win?
um, well, I'll get to the sentence in a second, but I just want to take a step back and talk about the journey. When we backed Samir, had this idea, and we said, okay, that sounds kind of interesting, but we believe in you, and we think that you're going to be able to go on this journey. And then he said, hey, and by the way, I think in addition to some software, like we're going to have to build into the banking rails. And I'm like, okay, well, that sounds a little bit harder, but we believe in you. Let's go on this journey. And then all of a sudden you hit the SVB financial crisis. And everyone's calling me panicked about where their money is, who do they trust? Everyone wants to go to JP Morgan. And so, we come out of this crisis and I said, well, this sounds like it's going to be an impossible task. And this probably venture is not going to go very far. And then, a few months later, Samir calls me. He's like, hey, we just signed up a couple more brands and then signed up a couple more brands. I'm like, well, okay, maybe he's made a lot of friends doing this thing and that's why they're signing up with him because he's a nice guy and he's very likable. But surely this, in a world where we just went through a massive crisis of confidence in the banking system, people can't be going to a neobank right now in this vertical. And sure enough, it started happening in droves and droves. And I think that spoke to the pain that the operators in this vertical were feeling. And so as I look at where the business today, billions and billions of dollars flowing through the Highbeam ecosystem, it is just remarkable to me. And I think the one word answer, I don't even need the sentence, is it's opinionated. It is built for commerce operators. And that's what makes all the difference in the world. And these commerce operators are looking for a partner to help them scale what they do. And so that would be my one sentence answer. But man, it wasn't obvious over that time.
Cool. So Samir, Amish had mentioned, that there was some time of doubt. What do you think Amish probably underestimated during that time?
But, I had doubts too at some point. So I think the part that I always believed is that technology, the problem exists, right? And someone's going to solve it, and it's a tough problem. And technology is part of the solution. But when I started the business, I really felt that being that financial partner that had the trust of the consumer brand, that they felt I was in their corner helping them scale the business, that was the core asset. And what banking is back in the day was you trusted your banker and went to their office and you felt like this person has my back. They're going to help me grow this. And we wanted that relationship with the customer. And the reason we started with banking or back into banking, because that was the best proxy for that seat, which is who's my trusted partner in the trenches with me, helping me to grow the business. And as long as people felt that about us, and I knew that our existing customers felt that, and the fact that after SVB, no one left. We lost 0 customers after SVB. And so I've called a lot of customers, that's for sure. They want to know exactly how it worked. But that to me was actually a learning thing about like, it might take a little longer than we thought, but the fact that I'm building this bond with the customer, and that's, I believe, with Highbeam is the most important asset we have, is the customer trusts us with their money. And we early on had this stat that said most fintechs make their money by lending, right? So the vast majority of fintechs make their money by lending, and it's at some point they have to figure out how to get the money back. We had this stat on like how much deposits do we have versus lending we do, and that's actually increased over time, because very consistently for me that's a proxy of like, does the person trust you fundamentally or not? And if they do, I can do a lot of things, and if they don't, I can't do anything. And so I think I knew that was always important. Now of course you have to grow and make it into a, you know, a venture backable business, but that was always my core for the business.
So it's the fact that you were opinionated, which is the original reason that he invested in you, which is why you're able to take these customers away from traditional banks because they don't have an opinion on the business.
Yeah, at best they're apathetic, and I think part of it's the segment. Like they care about enterprise and consumer, and SMB mid-market is hard. I think there's structural reasons why it's very hard for them to service them in the way they want. And I think that we're happy to kind of take that seat. Um, and so I think that's part of it. That's also the definition of what a bank is changing. Like to your earlier question, I think that banks, their
What's your
balance sheet.
definition of what a bank is becoming?
So I think the banking will get disaggregated into two chunks. There's the balance sheet, and some companies will do both, but it's the balance sheet financial engineering to go have the money to deploy in financial products, and it's the software and the intelligence to deploy it effectively. And that owns the customer relationship in my mind. And we're very much in the second bucket. And right now we're agnostic about the first bucket, and we, you know, partner there, and we're happy to do so. I think that some companies will seek to do both because of the balance sheet advantage on monetization. But I think banking evolves into what it used to be, which is the most trusted partner to help me run my business. And I think that it'll be a slow journey, but I think that is the end point for banking is I'm trusting you to store and move my money. You should have an opinion on how I do that. And right now banks don't. Like they don't have an opinion on how to run your business, but they're trusting you. Like you have the privilege of parking your cash with them, and for that they'll charge you $50 a month. But you know, I think that will change.
I think to Mish's point, like one of the interesting things about the high beam business is that if you go to a Main Street bank, they actually structurally cannot have an opinion on their business. They don't
Correct.
have insights into inventory. They don't have insights into all the additional data that you have at high beam. So I think they're actually structurally disadvantaged to having an opinion in the first place.
They're not trying to they're not trying to operate with you,
Yes.
Correct.
right?
Yes.
They're very much a passive repository. This is a much more of a partnering endeavor, and I think that's the differentiator.
So our entire conversation so far ladders up to a bigger question, which is the question of does AI actually end up making it easier to build enduring companies, or do the platforms end up getting stronger over time? Let's fast forward 10 years. Question to the both of you. What actually ends up happening in that case? Is it easier to build a business, which is, there's been some advantage for you in terms of building high beam, or do the platforms end up the analogy in this case would end up being a bank, do they end up being able to retain business over time?
I'll cheat and say both.
Okay.
I do think that what Amish said earlier is true. It's never been a time to start a business. And our hope is it's also going to be never an easier time to scale and make money from a business. And the opportunity for this democratization of financial intelligence to be available to a small business owner is transformative. It's the number one reason businesses fail past the first year is that you make bad financial decisions. So I think that if you had the power to harness that, whether through Highbeam through others, to make better financial decisions, it unlocks so many possibilities. And as a society, like, you know, part of the reason I think that I started Highbeam was I fundamentally believe that if you can have people give them the tools through technology to thrive and grow their businesses, it does good for societies at large. And I think, look, there'll be big platform winners that emerge because of the shifting tides and pieces that come together. But overall, if you can give people that have drive and energy ways to do that. You know, I make the joke, one of the most underrated parts about the business and the journey that I've been on is I love our customers. They're starting small businesses. They have this.
Which one's your favorite one?
Exactly. The one I talked to last. But they, you know, they have this energy and drive and passion, and they're trying to build things and get things rolling. Like our job is to help support that so that they can continue to do that. And I think that technology, I'm an optimist. I think it will help do that. Now there will be large, you know, the SpaceX equivalents formed, but I don't think that, I think the arc is towards helping people build large successful businesses.
Okay. Let's kind of conclude this with a few rapid fires at this point. And kind of going into now the investor-founder dynamic, Amish, what's a piece of advice founders are ignoring right now that they should be paying attention to a little bit more?
Move faster.
Okay. Samir, what's a piece of investor advice founders should ignore more often? Is it move faster?
Do what this other company is doing.
Okay. Fair enough. And Amish, do you agree or disagree with that?
I think that is advice that's given. I think that's very dangerous. Every startup, every company is built very much in the DNA of the founders. And so I try to be very careful with advice like that. I think it's really important to offer context and then allow the founder to figure out how that's going to be digested in their system. Because when you graft something that works somewhere else into a system that's not designed for it, it breaks. And so some people can work with no management layers, some people can't, you know. So founders have their own ways of operating. And I was in a conversation with a very well-known public founder recently, and they talked about how a decision they made 12 years earlier, they could still see the ripple effects of that today in their multi-thousand person organization. And so that's just the reality, is that companies are very much reflective of founders, and you have to be careful not to impose one founder's way of operating into another one. I just think that doesn't work.
We've covered big ideas, company building, and where the market's going. Let's get personal in this case. What's something about you that your team would be genuinely surprised to learn? We'll start with Samir.
At one point,
You thought a lot about this one.
I did. At one point, long time ago, I was a world-class Halo player. So Halo being the first-person shooter, for those that don't know, only because of the coincidence of that I was at
Master
Microsoft.
Chief.
Exactly. I was at Microsoft at the time, and the Halo testers would be in a conference room nearby testing, and we got in and would do that many a late night. And so maybe that's something that people they don't know and they may not believe, but it is true.
Okay, so when you eventually get everyone in the High Beam office to be playing a Halo together, whoever wins out of that circuit, what are you awarding them?
When I win that, no, I'm joking.
That car in the back right corner.
Exactly.
That car, yeah,
I
we could
will
definitely
ask
pass one of those.
Airwallex to sponsor the giveaway with that car in the background, and we'll all be very happy.
Let's chat about this one. A little bit more payment volume out of
I
High Beam
know.
that we pushed out.
TPV, TPV.
Exactly.
Okay, and Amish, in your case, what would you like to share with your team?
Oh my gosh. I was a judge of a dance competition, and my fellow judges were now currently a late night host and on Shark Tank as a judge.
So you're going to be breaking a leg for the office.
This
This
will
one's
take a
getting
lot to
tagged
get
with
Amish
first
to dance
mark.
the office.
That'll take a lot.
All right, the High Beam IPO.
There you go.
There we
I'll do
go.
it a little. I'll put together a little
I
jig
think
for that.
Incentive.
All right, so let's end the conversation by expanding it with others. Amish, who's an investor that we should absolutely get on the show and why?
Oh man, well, we talked a lot about Shopify, and I would say either Jeremy Levine at Bessemer or Trevor Olshig, who has now started his own venture fund. Both of them I work closely with at Shopify.
What do you respect about each one? What really stands out?
Great investors, great people, and deep thinkers about the space.
Samir, who's one founder that we should actually get on the show and why?
My old boss, Brian O'Kelly, so I used to work at a company called AppNexus that was acquired by AT&T before this. I think he's one of the smartest people I know in terms of thinking about the space around agentic advertising, how advertising's evolved, and I really highly respect him. So he's a great person to have on.
Phenomenal. That is it. Thank you so much for being on. Appreciate it, Amish.
Thank you.